Good evening, boys and girls. So, how are you, students? So, students, we have already done chapters 1 to 4. So, chapter 1 was about meaning of audit, nature of audit, objectives of an independent auditor, about standards on auditing. Chapter 2 was about audit planning and audit strategy and what is meant by audit program. So, in chapter 3, we read about concepts such as audit risk, components of audit risk, internal control, automated environment, and response to assessed risks. And in chapter 4, we had learned in detail about different audit procedures, about meaning of audit evidence, what is sufficient appropriate audit evidence. And we had also learned in detail about few essays which are there in your module by which an auditor obtains audit evidence, like Essay 501, like Essay 505 regarding external confirmations, Essay 510 regarding initial audit engagements, Essay 550 related parties, Essay um, 610 using work of internal auditor, and essay on analytical procedures 520. So these things we had gained an overview. Now this chapter, students, chapter 4 is of a different type. For understanding chapter 5, the name of the chapter is Audit of Items of Financial Statements. So it is just not about auditing, but it is also based upon provisions of Companies Act 2013 about your accounting knowledge, what you have gained by means of accounting standards, and specific requirements of Schedule 3 of Companies Act 2013. And of course, auditing procedures are there for an auditor to apply. So it is a mixture of all these four things. So students, the best approach to study this chapter is that first of all, you need to have knowledge of Schedule 3 of Companies Act Division 1, which is in your syllabus, and it is also in your accountancy course. It is also in your accountancy paper. Okay, so you can go through your accountancy module, your accounts module. I think it is in module 3, and you can read Schedule 3. So if you read Schedule 3, if you understand Schedule 3 and remember the main key points, main disclosure requirements which are there in Schedule 3, so half of your work is done in relation to this chapter. Okay, so Schedule 3 would serve twin purposes. Number one, it would help you in your accounts also, and it would help you in auditing also. So single topics, Schedule 3, if you do well, if you remember it well, if you remember the disclosure requirements, so not only it would help you in your accounts paper, but the same knowledge would help you in your auditing paper. So by keeping in mind the same things, by learning same things, two purposes would be served. So guys, remember, disclosure requirements of Schedule 3 are very important. So at least minimum one question is coming routinely in the exams relating to disclosure requirements as prescribed in Schedule 3. So what is Schedule 3? I presume that you know this. Any case, Schedule 3 contains how balance sheet of a company is to be prepared and presented. It contains those requirements. What is the format? How balance sheet of a company is to be presented? What are the various heads? What are the various heads in statement of profit and loss? And there are instructions relating to different items, what disclosures have to be made, like for trade receivables, certain disclosures have to be made, for trade payables, certain disclosures have to be made, for revenue, certain disclosures have to be made. Okay, so similarly, for other items, for reserve and surplus, for share capital, for property, plant and equipment, there are disclosures which are required to be made in accordance with the requirements of Schedule 3. So while reading this chapter, while studying this chapter, you would find reference to Schedule 3 at many places. It is littered all over the chapter. So if you do it item wise, you would end up doing nothing. So it is better to go through the complete Schedule 3 at once. Okay, is that clear, guys? Is that clear? Drop your mail, guys. So I am showing you Schedule 3 of Companies Act. So this I have taken just from your accountancy module. Okay, probably I have also uploaded it. It is in third module, I think. So this is the format of balance sheet of a company. Okay, and this is the format of balance sheet of statement of profit and loss, which is below. So in format of balance sheet, you can see items. Yes, Akash is saying he is not able to join Zoom. अशोक जी, क्या वो पट्टी चल रही है क्या Zoom की? Yes, अशोक जी, हेलो अशोक, Zoom की पट्टी चल रही है क्या YouTube पे? Akash, you just click on that link which is running on YouTube and download the Zoom app, and you can enter meeting ID and straight away you can join. It is very simple. So equity and liabilities, there are shareholder funds, non-current liabilities, current liabilities. Similarly, in assets, there are non-current assets, there are current assets. Okay, so guys, you know the difference between a current asset and non-current asset? Yes, tell me, anyone. What is the difference between a current asset and non-current asset? So first thing, what you would be doing is you would be remembering this format. What is included in non-current liabilities? What is included in current liabilities? What is included in assets? What is included in non-current assets? Okay, and then you would yes, answer, Krish. What is difference between a current asset and non-current asset? Then there are disclosure requirements, various disclosure requirements. So this have all to be done by you. This you have to remember. Okay. So like I was telling you that it would help you both in auditing and in accounts. You have to do. So it would help you in both the subjects. Yes, what is the difference between a current asset and a non-current asset? Yes, anyone? Krish, Akash, Priya, Mohammed? Yes, Akash, you are saying current assets ready to realize in cash in current accounting period. No, Akash, you have to use the correct words. Not in current accounting period, in a period of 12 months. Yes, Priya, you are right. Yes, Krish, while non-current assets yield benefit for more than a year, yes. So all kind of assets like inventories, like trade receivables, like cash and cash equivalents, these are classified as current assets. Why? Because these are expected to be realized within a period of 12 months from the date of their acquisition. Okay. So we say these are current assets. Other are non-current assets, which constitute like property, plant and equipment, like long-term loan and advances, intangible assets. These are all non-current assets. Similarly, for liabilities, there are current liabilities like say trade payables, like say short-term borrowings, whereas long-term borrowings are non-current liabilities. So, what is? Can you give example of short-term borrowing? Yes, any one of you students, can you give example of short-term borrowings? A credit facility provided by bank, which is a short-term borrowing by a borrower, by a client, by a company. Yes, yes, Krish, you are right. Cash credit facility. So we would be reading in detail about cash credit facility when we will come to chapter number 10, that is on audit on banks. Okay. So all these, yes, cash credit facility, overdraft, these are all short-term borrowings, short-term loans. Yes, you can say, Muhammad. So guys, all these format and disclosure requirements have to be remembered by you. All these things. Okay. So these are very, very important. At least minimum 1 mark question, minimum 4 marks question would is going to come from disclosure requirements, as we can see um, from the previous patterns. This year also 1 4-mark question had come in descriptive paper regarding disclosure requirements. Okay. So similarly, there is format of statement of profit and loss. Now, what is statement of profit and loss? Revenue from operations, other income, expenses. So there is a prescribed format for companies in accordance with which financial statements of a company are to be prepared, be it balance sheet or be it statement of profit and loss. So there is a prescribed presentation format. So you have to remember this, everything and disclosure requirement. Similarly, in schedule 3, disclosure requirements of profit and loss are also given. Clear? Is it clear, guys? And besides it, so this is one part of this chapter. So once you do schedule 3, you have done about, say, about 30 to 35% of this chapter, or even rather more, I would say. Around 40% you would have done. And provisions of Companies Act, there are certain sections which you have read in Companies Act, like section 52, 53, 54. Okay. So these also find place in this chapter. So these things you have already done in your company law classes. Okay. And basic accounting knowledge and accounting standards, this anyway you are doing. So while reading this chapter, you would find reference to different accounting standards like AS2, AS10, okay, AS26, AS29, AS9. So you would find references to this. So if you already know the accounting part, it would be cakewalk for you. What you have learned in accountancy, what you have understood in accountancy, same thing you have to write here. Okay. And then there are auditing procedures. So again, auditing procedures, what we have read in chapter 4, these are derived from that. Only thing is that these have to be applied to those particular items of financial statements. Clear, guys? You now know the overview of the chapter. Yes, Akash, you are asking cash credit facility provided against mortgage. So how it can be short-term borrowing? So it may be provided by mortgage. Like say, you have to see what is the purpose. So borrowing is classified as a short term or long term on the basis of purpose for which it is used. Like Krish has said that cash credit facility is a type of short term borrowing. Okay. So cash credit facility is granted by banks to borrowers to meet their working capital requirements. So what are working capital requirements? Working capital requirements mean like for purchasing raw material, for incurring labor expenses, for paying wages, for paying electricity bill, for running the plant. So these are all working capital requirements. Okay, and these are so as you know that working capital requirements are always short term. So therefore the credit facilities which are given to a borrower are also short term in nature, because it is assumed that operating cycle would be complete within a period of 12 months. Say I would be purchasing raw material, converting into finished goods and selling it and realizing money from the debtors. So my operating cycle would be complete unless until the nature of business is such that operating cycle is of a longer period. Then you have to determine that operating cycle and say that my operating cycle is of longer period. Okay. So mortgage is only a security. Say company gets cash credit facility by mortgaging house of a director, residential house of a director. So it has nothing to do with the security. The purpose of facility was to meet working capital requirements of the company. Yes, Akash, is it clear to you? Yes, Akash, is it clear to you? So let us do, students, few important items which appear in financial statements. So you can, whatever the procedures which are not specific to a company, you can apply, you can write these procedures for any organization. Okay. But wherever there is specific reference to provisions of Companies Act, wherever there is specific reference to Schedule 3 of the Companies Act, then it means that these are applicable only in case of companies. Okay. So now, say students, you are going through financial statements of a company. You are going through statement of profit and loss, and you find a certain figure uh, reflected under the head revenue from operations. Okay, sales. So, so students, how you are going to verify sales? Think of certain procedures which you would apply to verify sales, to verify various assertions relating sales. Say first of all, if sales of say 100 crores are reflected in financial statements of a company, so first assertion, what I would check? I would check about existence. So whether these sales are genuine or not, whether these are not fake, whether these transactions in fact occurred or not. So which procedures I would apply? Just think from your common sense point of view. You can read it from your module later on. At this stage, just think from a commoner point of view. Yes, by vouching sales invoices. Yes. But before vouching sale invoices, what you would do? Say if the sales of a company are 100 crores. So before checking few sales invoices and reconciling it with the entries in sales account, what you would do? Yes, this is correct. Checking e-way bills, Krish Parekh, Deep Shikha, also okay. But before doing these things, before performing this watching or tests of details, what you would do? No, Akash. One important point, students, we are leaving. This is what I am trying to ask from you. Yes, anyone, before doing these tests of details, which procedure you would embark upon? Yes, guys, you have to think this way, na? Because if you just try to cram up the things, if you just try to mug up the things and do not apply your mind, no fruitful purpose would be served. Because if you cram without gaining knowledge, without understanding, then you will forget. First of all, guys, you would see about the internal control regarding sales. A basic point है students. Remember, internal control, ये पेपर में भी एक आपका कॉमन पॉइंट रहेगा स्टूडेंट्स. Whenever you start doing question on audit procedure, you can always write verify internal control regarding this thing, regarding say if we are talking about sales or we are talking about purchases. So by by testing controls over sale, you gain assurance that you gain confidence that controls over sales are being operated effectively. Isn't it, guys? You would see how customer orders are received and how those orders are converted into sales, and how when sales take place, how invoice is raised, who is responsible for that, who verifies its authenticity, and how that invoice is entered in books of account, who is responsible for that. Okay, so you would test the controls pertaining to sales, and besides performing the procedures on sales which you are saying, you would you would also send, say, confirmations that would also give you confidence that sales are genuine, because if you send confirmations pertaining to trade receivables, then it also supports your conclusions pertaining to sales. So these again show give you satisfaction regarding occurrence assertion of sales. So you would you are verifying invoices, few sale invoices. You see that invoices have been generated by the company. These are also reflected on the GST portal. So what you are gaining? You are testing the occurrence assertion. It shows that sales have in fact occurred. Like while verifying eBay bills, you also test the assertion that goods have moved out of the factory. Because why sales have taken place. So it means the transaction has occurred. Clear, students? And you would also see regarding the accounting policy pertaining to revenue recognition, how sales are booked. Now, when risks and rewards are transferred, these should be booked at that time in accordance with AS9. So these things would be checked. So you would also verify completeness assertion of sales. Okay, like say you would uh, verify last few invoices which are there in the year end, and all say last 5-10 entries which shows stock out in the stock records. You would see whether sales pertaining to these have been booked or not. So it would give you satisfaction regarding completeness assertion that all the revenues which were required to be booked have in fact been booked. Yes, guys, is it clear? So, and you would also see that sales have been properly disclosed in financial statements in accordance with the requirement of Schedule 3. So like say students, there is a company which is say manufacturing machinery. Okay, let us assume the company is engaged in manufacturing machinery. So it also provides repair services. Okay, whatever machinery it is manufacturing, after it is sold, it is also providing repair services. Say, and the revenue of the company from sale of machinery is say 50 crores, and from repair is say 50 lakhs. So tell me whether this whole revenue would be shown um, together, or some disclosure is required in respect of it. Yes, you have read about schedule 3. Yes, guys, you have read about schedule 3, disclosure requirement of schedule 3 in relation to revenue. Yes, Deepika, disclosure is required. Yes, schedule 3 requirement state that disclosure is required for services and products separately. Like in respect of a company, revenue from operations shall disclose separately in the notes revenue from sale of products, sale of services. Service is something else and product is something else. So a company and entity can be providing both products as well as services. Okay. Like say a company is engaged in manufacturing of a product and it is also carrying out job work on behalf of other parties. Okay. So job work is a service because it is only providing labor services for that process, for that operation. Like say if um, I am a textile manufacturer and I am manufacturing a textile product by purchasing by my own raw material and converting into finished goods, then I am selling a product. And say if somebody else sends to me his raw material and machines at my factory convert that raw material into finished goods, and I simply perform that process and send goods back to that person, then I am just giving a service, but it is generating revenue. So the stocks also belong to that person, to that on that company which has sent the goods to me for job work. Yes, guys, is it clear? So similarly, if a company is engaged in say export sales, then obviously requirements of AS11 have to be taken into account. So guys, you understand the first thing which I told you at the beginning of this chapter, that this whole chapter is based upon little knowledge from uh, accounting standards, knowledge from schedule 3 and knowledge from companies act wherever required, plus auditing procedures. So this is the right approach to study this chapter. Okay. And say how we are going to test various assertions pertaining to trade receivables. Say now we take another item, trade receivables. Now trade receivables we know are current assets normally. Okay. So how we are going to say first test occurrence assertion pertaining to trade receivables. Yes. Yes. Anyone? Yes, Krish, Priyanka, Priya. How we are going to test occurrence assertion of trade receivables? Yes, guys, very simple. Just apply your mind. How would you verify that trade receivables, trade debtors which exist, which are reflected in financial statements, these in fact do exist? Yes, Priyanka, you are saying repetitive transaction, there is no duplication of receivables. But how you are going to test this? Yes, yes, Krish, how you are going to test this? So again, say students like in trade receivables, first you would see internal control system over trade receivables. What controls are there in the company to see whether sales are not made to fictitious customer? First you want to be assured in this respect. Okay, so again this is related to sales. So if you have tested this aspect in relation to sales, obviously this would help you in trade receivables also. Okay, and how you would verify the existence assertion? So obviously you would be sending confirmations, so that would give you the comfort that trade receivables in fact exist. So how you would send confirmations? Which was the essay dealing with it? Yes, we had read in our last class. Yes, just let us have a quick recap. Which essay deals with sending external confirmation requests? Yes, guys, this should come with lightning speed. No, no, Akash, you are wrong. It is not SA 510. Still, till now, you do not even remember a name of an essay. It is SA 505. Yes, Krish and Priyanka. So you have to send external confirmation requests. So when external confirmation requests are sent and the trade receivable balance which is reflected in the financial statements, it is confirmed. So you gain a comfort that these balances in fact exist, that sales transactions had occurred, genuine sales were made, and say payments were received from these parties, and whatever is left is reflected in account of that trade debtor. Okay, and how would you check valuation assertion of a trade receivable? Now say 50 lakh is appearing as trade receivable relating to one party, how I would test that this trade debtor, that this trade receivable is valued properly? Yes, Yes, anyone? Yes, Priya. No, Priyanka Pandey, you are saying through account balance. I am talking about valuation. Valuation is something different. Say if an amount, if a said trade receivable is reflected at rupees 50 lakh in financial statements of a company, how do I gain comfort that it is valued properly? Valuation is a different thing. Some adjustments may need to be made to arrive at proper valuation. So students, like, you would check aging analysis, whether whether debtors are whether that debtor is old or not. So if it is old, why payment is not being received? What steps the company has taken to get the payment? And if it is not being received, then whether a provision is required to be made. A part of it may have to be written off. Provision for bad and doubtful debts may have to be made. Yes, Priya, you are right. So these things pertain to valuation. These things pertain to valuation. Okay. So how you would test students completeness assertion of trade receivables? That all trade receivables that were supposed to be recorded have been recognized in the financial statements. So obviously, like in case of sales, we have seen that you would test few invoices which are there at the year end. So similar thing you would do, that invoices issued during the last few days, these have been included in debtors. Okay. So simple things, guys. And how you would valuation, I have already told you. And there are disclosure requirements in respect of trade receivables in accordance with Schedule 3 of the Companies Act. So guys, this is very important, and this you have to remember, that this disclosure is required for trade receivables in accordance with Schedule 3. So you have to, the company has to give this disclosure, that how many trade receivables are less than 6 months old, 6 months to 1 year, 1 year to 2 years, 2 to 3 years, and more than 3 years. And this information has to be given in respect of undisputed trade receivables considered good, undisputed trade receivables considered doubtful, and disputed trade receivables considered good, and disputed trade receivables considered doubtful. Okay, this is very important, guys. And further, trade receivables have to be sub-classified as secured, considered good, unsecured, and doubtful. And further requirements are also there. Related party disclosures have also to be given. Allowances for bad and doubtful debts has also to be given. So these things you have to remember. So that is why I am saying, if you do Schedule 3 properly, then 30–40% of this chapter is done. Okay. So while doing sales also, students, now tell me which kind of analytical procedures you would apply while verifying sales. Yes. Which type of analytical procedures? What kind of analytical procedures? Which analytical procedures you would perform while verifying sales? No, that's true, Priyanka, substantive analytical procedures, but tell me certain procedures. You want to apply certain substantive analytical procedures on sales. Which are those procedures? Yes, inventory turnover ratio is would be applied in case of inventories, Krish. It would give more information about inventories. For although it gives information about it gives inferences about turnover also, but it is more a measure of how fast stocks have moved. Okay. So like you would perform trend analysis, you would compare sales of this year with previous year, you would make category wise analysis of sales. So on, just normal, simple, logical things. Okay. So similar things, guys, you have to perform in respect of purchases and trade payables. Okay. So which procedures, which analytical procedures you would verify, you would perform in respect of purchases? Now let us discuss. In respect of purchases of raw material, say we are talking about a manufacturing entity, the company is purchasing raw material. So besides performing general procedure like testing controls, like watching invoices, watching purchase invoices, tracing the entries um, uh, through in records, what has come within, what has come inside the factory, by checking those in entries, uh, which analytical procedures you would perform in respect of raw material purchases? Yes. No, Deepika, I am talking about analytical procedures. I am talking about analytical procedures. Yes. Purchase trend analysis. Yes, Krish, it is correct. What else? Yes, students, what else? These are the analytical procedures, guys. consumption analysis. Auditor should scrutinize raw material consumed as per manufacturing account and compare the same with previous years. Stock composition analysis. Okay. So percentage of raw material in the total stock and compare it with the previous years. Ratios, creditor turnover ratios. Okay. So related to purchases, students, trade payables. So for verifying existence of trade payables, again you have to send confirmation. So this would indicate about the genuineness of trade payables. This would indicate about the existence of trade payables. Okay. And what are the disclosure norms, students, in respect of trade payables prescribed in Schedule 3 of Companies Act? Like there are disclosure norms pertaining to trade receivables. Similarly, there are disclosure norms pertaining to trade payables. What are those disclosure norms? Yes. I had shown you just the format of balance sheet of company as prescribed in Schedule 3. Did you notice something pertaining to trade payables? Yes. Did you notice something pertaining to trade payables, guys, in that format? Now, in case of a company, students, trade payables have to be separately shown for micro and small enterprises and for creditors other than micro and small enterprises. Now that is very important, guys. What is the logic behind it? That I would also tell you. So like this, trade payables, this is the format. In trade payables, total outstanding dues of micro and enterprises and small enterprises, these have to be shown separately, and total outstanding dues of creditors other than micro enterprises and small enterprises. So law has made this requirement that trade payables, trade creditors of micro and small enterprises have to be shown separately. Now, what is a micro enterprise? What is a small enterprise? Now, it is not to be confused with a small company. It is not to be confused with the definition of a small company. Yes, guys. Do you know what is the meaning of a micro enterprise and a small enterprise, which is referred to in Schedule 3? Yes, anyone? Yes, yes. Krish, you are nearing the point. So look guys, the logic behind it is that there is a separate law, micro, small and medium enterprises Development Act 2006. Okay, so there is a separate law, there is a separate legislation on it, and under notification issued through this law, micro and small enterprises have been defined. So micro enterprise is an enterprise where investment in plant and machinery is rupees 1 crore and turnover is up to 1 crore and turnover is up to 5 crores. Okay. Similar requirement is there for small enterprise where investment in plant and machinery is up to 5 crore and turnover is up to 50 CR, if I am not wrong. Okay. So based upon these twin criteria of investment in plant and machinery and turnover, these enterprises are classified as micro and small enterprises. Okay, so there is a site you can obtain a certificate from that site which would show your category. Okay, so now if any company, if anybody purchases from such units, from such micro and small units, then they have to make payment to such units within a stipulated time, which Krish is correctly referring as the outer limit of such time period is 45 days. So you have to make payment of these creditor in a maximum period of 45 days. Okay. And if you do not make payment, then interest has to be paid. So therefore, Companies Act 2013 has made a distinction of between creditors pertaining to micro enterprises and to creditors other than micro and small enterprises. Clear? Fundamental logic is clear to you? So in disclosure requirements pertaining to trade payables also, certain disclosures have to be provided. Whether the company has disclosed the following details relating to micro and small enterprises in notes. Okay. The principal amount and interest due thereon remaining unpaid to any supplier. The amount of interest paid by the buyer in terms of section 16. So these are the requirements. And this is the disclosure aging schedule which is to be given for trade payables. This is also very important, guys, from examination point of view, that you have to classify the trade receivables into MSME, others, disputed dues MSME, and disputed dues others. And aging has to be done less than 1 year, 1 to 2 years, 2 to 3 years, more than 3, and total. Remember the distinctive points between disclosure requirements of trade receivables and trade payables. Do not get confused between the two. So when we were discussing about disclosure requirements pertaining to trade receivables, then we had studied that this disclosure requirement is for a period of less than 6 months. In trade receivables, it was less than 6 months, 6 months to 1 year, 1 to 2, 2 to 3, and more than 3. Now here it is less than 1 year, 1 to 2, 2 to 3, and more than 3. And in trade payables, there is separate aging for MSME, others, and disputed dues for MSME and disputed dues for others. Whereas in case of trade receivables, there is no reference to MSMEs. Yes, this aging schedule, Krish, is there in at page 5.78 of your module. 5.78, page 5.78. So students, when you will be reading all these things, when you will be remembering all these things, this chapter would be a cakewalk for you. It would be very scoring, and the weightage of this chapter is around 15 to 20 marks in the paper. So 3-4 questions are going to come from this chapter, whether these may be covered in case studies or whether these are in descriptive type or in combination of both. Okay, clear students? So now let us have a look at inventories, say. So how you would test various assertions pertaining to inventories? Yes. So first of all, first assertion relating to inventories would be existence, because inventory is a balance. It is a balance sheet item. So the first assertion pertaining to inventories would be existence. So how you would verify existence of inventories? Yes, students, how you would verify existence of inventories? How you would verify existence in assertion of inventories? Yes, Krish, you are right. By attending physical inventory count. Now, which essay deals with it? Which essay deals with it? We have read it in chapter 4. Which essay deals with it? And always remember, Akash, Krish, and Priyanka, that the auditor attends physical inventory count. Primary responsibility of physical verification doesn't lie with the auditor. It lies with the management. Preparing a plan for physical inventory count is responsibility of management. Conducting inventory count is also responsibility of management. Auditor's responsibility is to attend that physical inventory count and to see that how management is conducting its process and to make test counts and see the condition of inventories. Yes, Krish, SA 501, it is right. And which essay deals with which accounting standard deal with valuation of inventories? Which accounting standard, AS, deal with valuation of inventories? Obviously, AS2, guys. AS2. So always remember that inventories are valued at cost or net realizable value, whichever is lower. Okay. So to verify existence assertion, the auditor would review the entity's plan for performing inventory count. He would attend the inventory count. He would verify, test count the inventory. He would see the existence of inventory. So all these things you have read in last chapter. Okay. And which analytical procedures he would perform pertaining to inventories to ensure that all inventories recorded are complete. Now here comes ratio analysis, like inventory turnover ratio, like analyzing inventory turnover ratio. So you know the formula of inventory turnover ratio, guys? Cost of goods sold upon average inventories. Average inventory means opening stock plus closing stock divided by 2. So formula for calculating inventory turnover ratio is cost of goods sold upon average inventory. So if cost of goods sold is say 50 crores and average inventory is 5 crores. Okay. So inventory turnover ratio is 10. So what does this denote? This denotes that inventory is moving quite fast. So if I divide this figure of 365 by 10, then it comes to 36.5 days. It means that inventory is rotated in a period of 36 days within in about a month or so. So it means the goods of thus inventories of the company are moving quite fast. Sales are taking place quite fast and the stocks are being replenished. Okay. So if you compare inventory turnover ratio of one period with another, okay, or one company with another company dealing in similar kind of goods, so you can draw inferences. So these are kind of analytical procedures. So this would help you to show that inventories are in fact complete. So when you perform analytical procedures and you notice some abnormality, then obviously you would find out what is the reason of this abnormality, why this abnormal variation is there. So that is the basic purpose of analytical procedures. Okay. Inventory upon total assets. So what is the percentage of inventory in the total assets? What was last year? What is this year? And if changes are there, if substantial changes are there, what is the reason for it? So such kind of procedures you would employ. And students, and in respect of account balances, we had learned in chapter 4 that there is an assertion by the name of rights and obligations. So what is the meaning of rights and obligations in context of inventories? Yes, anyone? What is the meaning of rights and obligation in respect of inventories? Now tell me first whether there would be rights in respect of inventories or obligations. Yes, guys. Whether there would be rights in respect of inventories or obligations. Yes. Akash, how you are saying obligation, and Priyanka, how you are saying obligation? What is an inventory? Is it an asset or liability? Inventory is an asset or liability? Inventory is an asset. So for assets, there are rights. For liabilities, there are obligations. Is it clear to you guys, Akash and Priyanka? So right in case of asset means that the company, the entity has a right over it. It owns those goods. So how you are going to verify this? Simple, just simple, very simple. Yes, Deepika, company has rights over inventory. That's right. So how you are going to test rights assertion in respect of inventories? Yes, Krish, you are right. Yes, simply by seeing purchase invoices. So you obviously say if the company has purchased raw materials, then it would be having invoices in its name. So what you are verifying by those purchase invoices, you are testing that these goods have in fact been purchased in the name of entity. So the entity has a right over it. So simple. Yes, Deepika, you are also right. Okay. So guys, also understand that inventories have to be valued properly. So as you know, you have read it in AS2 that inventories can be raw material, these can be work in progress, these can be finished goods. So raw material has have to be valued at cost plus plus uh, all those costs which are necessary to bring those raw material to the entity's place, to that very location. Okay, so like direct transportation expenses. Okay, like say if some material has been imported, then import duties. So these form cost of purchase, like freight from port to the factory. These form element of the cost of purchase. Okay. Yes, Akash, I will scroll the screen. The formula is given in your module also. You can take the screenshot, but it is given in your module also. Like it is given here, compute inventory turnover ratio, cost of goods sold upon average inventory. Yes, Akash, is it clear to you? So similarly, while valuing work in progress, so you have to see what is the stage of production. Now, how work in progress is valued. Now, at which stage, what elements of different costs have been taken into account to value work in progress. So you have to see the stage of completion of the production process. Okay, like um, say the company is manufacturer of some shirts. So and some shirts always remain in manufacturing process. Then obviously you have to value those shirts up to the different stages. What type of work has been done in respect of those shirts. Okay. So similarly for finished goods, You have to value them uh, at cost or net realizable value, whichever is lower. And students, one more thing important in case of valuation of inventories is that you have to see whether there are any old or obsolete inventories. So if there are any old or obsolete inventories, then an allowance for obsolescence has to be made. Okay. So if some inventories are quite old, or say these are damaged, so obviously you need to write down the inventories. You need to write down value of inventories. Yes. Is it clear, guys? And these are disclosure requirements of schedule 3. So these are there in respect of every item. These are disclosure requirements of schedule 3. In respect of inventories. So inventory has to be classified as per requirements of schedule 3 into raw material, work in progress, finished goods, stock in trade. Stock in trade means traded goods. Say company may be a manufacturer, but it also engages sometimes in trading. It purchases finished goods and sells them as such. So this is stock in trade. Okay, stores and spares and loose tools. And if goods in transit are there, these have to be disclosed separately under each of the head. And mode of valuation shall be stated. How inventories have been valued, which method has been applied for valuation, say FIFO, average. So all those things. So is it clear? So another item, main item on under heading non-current assets is PPE, property, plant and equipment. Now, which accounting standard deals with the PPE? Yes, guys, which accounting standard deals with PPE? Yes, AS10. Yes, right. Dot on. Okay. So you already know that the cost of an item of PPE should be recognized as an asset if it meets the following criteria as per AS10. It is probable that future economic benefits associated with the item will flow to the enterprise, and the cost of item can be measured reliably. Okay. Say, tell me, guys, if a company has imported machinery, say costing rupees 10 lakhs. So sorry, say rupees 1 crore, and it has paid freight of rupees, say 1 lakh from Mumbai port to Noida. Okay. So where this freight would be shown, whether it would form part of statement of profit and loss, or whether it would form part of PP. Yes, yes, guys. Whether this freight paid on the machinery, whether it would form part of statement of profit and loss or form part of cost of machinery. Yes. So it would form part of cost of asset. It would form part of PPE. And say similar expenses, like say certain expenses have been incurred for erection of machinery. So these would also form part of PPE. These would be capitalized. Okay. Or say engineers have come from the nation from which the machinery was imported for installing the machinery. So fees paid to those engineers would also form uh, cost of PPE. It would be capitalized. So the cost of an item of PPE comprises these things as per AS 10, which you already know. Its purchase price, including import duties and non-refundable purchase taxes, after deducting trade discounts and rebates. So anything which is non-refundable, which goes to form part of that asset, is capitalized. It forms part of that asset. It forms cost of that asset. Any cost directly attributable to bringing the asset to location, like we have seen in case of rate. Okay. The initial estimate of cost of dismantling, removing the item and restoring the site on which it is located, such as decommissioning costs. These are also uh, element of cost forming part of cost of PPE. So like installation cost, cost of wages incurred for erecting the machinery, cost of site preparation. These are all such costs which are capitalized as per AS 10. And you have also to remember those costs which are not to be capitalized. These are not costs of an item of property, plant and equipment, like cost of opening a new facility or business, such as inauguration costs, costs of introducing a new product or services, administrative expenses. So, so students, how you would verify existence assertion pertaining to PPE items? So certain PPE items are appearing in financial statements of company. How you would verify existence assertion? First of all, that those items, those account balances, in fact exist. So existence is the first and foremost assertion in case of account balances. You already know this. Yes, guys. So whose responsibility it is to verify the physical existence of PP items. PP physical verification, whose primary responsibilities it is to conduct physical verification of PP items. Yes, Priya. whose primary responsibility it is to conduct physical verification of PPE items. Yes, anyone? Krish, Priyanka, say, guys, these are fundamental concepts. You do not have, you should never forget these concepts. Employee, no, Shambhavi. Yes, management. Management. No, Akash, how you are saying internal auditor? Primary responsibilities of management. So again, guys, keep this fundamental concept in your mind. Keep it embedded in your minds. Preparation of financial statements is responsibility of management. Preparation of internal control is responsibility of management. Carrying out physical verification of PP items is primary responsibility of management, because management is responsible for preparation of financial statements. Huh? So if the management has now not carried out physical verification, then how it can assert regarding assertion of existence in the financial statements. Assertions pertain to management we had read in chapter 3 and 4. Yes, Krish, your messages are reaching. No, internal auditor, you can't write internal auditor. So Lokesh, this is a very long chapter and still I am trying to cover the main points. So it's better we do not take any break. So internal auditor can be part of the overall control system, but primary responsibility is of management. Okay, and the auditor's responsibility is to see whether management has conducted physical verification of PPE items during the year. So how he would see? He would see, look, give me the plans. How and when did you conduct physical verification? Show me the documentation. So he would inspect those plans. He would inspect those documents when physical verification was conducted, at which date. He might see internal auditor's report in this respect, whether physical verification was conducted or not. Yes, Priya, you are right. So this is the important point which you have always to remember in auditing. Like physical verification of inventories, it is also primary responsibility of management. Auditor comes into the picture later on. He attends physical inventory count. He performs test counts only. The whole responsibility of preparing a plan, how physical inventory count of say inventories would be carried out, this is also all lie in the domain of management. It is a responsibility of management. Never forget these things. These would help you in answering auditing questions in many ways. In case studies also, it would help you in answering descriptive questions also, it would help you. Okay. So you would review the entity's plan. Look, show me how you have conducted your physical verification. And obviously you would be verifying schedule of PP items like opening balance plus addition minus deletion, closing balances. So you would check arithmetical accuracy of PPE schedule. You would tally the opening balances with the previous year. Okay. And in this way, you would see that all the items which need to be recorded under the head PPE, these have been in fact been recorded. So in this way, you would be testing completeness assertion. Okay. And say you would also verify that uh, it could be possible that there may be some items which are in the nature of PPE but lying in the client's premises, but in fact they belong to third parties. Okay. So and there could be the case that say a company look, I'm giving you an example. Say a company has sent some machinery for repairing. Okay. So as on balance sheet date, the machinery is lying with the service provider. It is not in the entity's premises. It is lying with the service provider. So now tell me whether it would be reflected in the financial statements of company or not. Yes. Yes, students, tell me whether it would be reflected in financial statements of company or not. Yes, Akash, you are right. So it would be reflected in the financial statements of company because it is owned by the company, but it is lying with in the premises of third party. It has been sent for repair. It doesn't mean that company has relinquished its rights over that asset. That asset is owned by the company. It belongs to the company. So the auditor has to see that that all the PP items are included. So thus he verifies completeness assertion. Okay. And what about valuation, guys? What about valuation of PP items? Obviously, depreciation has to be charged. So in case of companies, guys, tell me um, depreciation is charged on the basis of useful life of an asset. So where are such useful lives um, prescribed under Companies Act? Yes. Anybody? Yes. Can you tell, guys? So like students say a company owns various PP items, say it has building, it has machinery, it has office equipment. So depreciation is charged on basis of useful lives of these assets. Now where these useful lives of various assets are prescribed under Companies Act 2013. Yes. Anyone? Yes, yes. Krish, you are right. These are there in schedule 2. Remember guys, this is very important point. These are in schedule 2 Companies Act. These are not in schedule 3. Remember, this is very important. These are in schedule 2 of Companies Act. Like say, for a building, useful life is, for certain kind of buildings it is 60 years. For certain kind of buildings it is 30 years. Okay. Similarly, for certain kind of machineries, it is of a certain period. Okay. So these are there in schedule 2 of the Companies Act. And whatever disclosure requirements are there in respect of PP items, it is there in your module. Land, building, plant and equipment, furniture, vehicles. So all this you have to remember. And regarding rights and obligations, you would be seeing the, say, invoices or title deeds in respect of land, invoices in case of machinery. Okay. Now, students, there is another item in financial statements of a company relating to intangible assets. Now, you remember the meaning of intangible assets as per accounting standard? Which accounting standard deals with the intangible assets? Yes, anyone? Which accounting standard deals with intangible assets? Yes. Shambhavi, yes, you are right. It is AS 26. No, Akash, AS 29 deals with the provisions and contingent liabilities. AS 26 deals with intangible assets. So how would you verify existence assertion of intangible assets? How would you verify existence assertion of intangible assets? Yes, anyone? Yes, Krish, Priyanka. How would you verify existence assertion of an intangible asset? An asset which is an intangible which cannot be touched. How would you verify its existence assertion? Yes, guys. Anyone? Is there some way from which you can verify existence assertion of intangible asset? Yes, yes, Priya, by whether it is in use. So if say some intangible asset is in use, then you can verify its existence. Like you can verify the existence of software, whether such software is in active use by the entity. And for this purpose, the auditor should verify sale of related services and goods during the period. So if some services are being provided by the company using that software, so it means indirectly you are verifying existence assertion of that very intangible asset. Okay. So completeness, again you have to verify the movement in intangible assets like opening balance, addition, deletion. So in intangible assets also we know that there are amortizations. So intangible assets have to be valued properly because their value decreases over period of time due to usage or due to obsolescence. Okay, so amortization has to be charged on intangible assets. It has to be seen. So these are the disclosure requirements of intangible assets as per Schedule 3, which you have to remember. Disclosure requirements of intangible assets as per Schedule 3. Yes, now we come to students borrowings. Now we come to borrowings. So borrowings have to be classified as long-term borrowings and short-term borrowings. Okay. So long-term borrowings form part of non-current liabilities and short-term borrowings form part of current liabilities. So how would you verify, say, short-term borrowings? Yes, students, how would you verify short-term borrowings? How you would verify existence assertion of short-term borrowings? How would you know that the company, that entity has borrowed some money? Which document you would see? No, no, Krish, you are saying whether we would see by checking the cash flow statement. No, which is the foremost document? So you would see, say, copy of loan agreement, or you would see a bank sanction letter from where the company from where the entity has raised the loan. Yes. Loan paper, borrowing agreement, these are correct things. Loan sanction details, it is also right. So you would also seek independent confirmation from the lender, like as a direct confirmation procedure. So you would seek direct confirmation from the lender whether you have lent this money to this client, to this entity. So it would ensure that this borrowing really exists. Okay. And how would you ensure completeness of short-term borrowings? How you would ensure completeness of, how you would verify completeness of short-term borrowings? Yes, anyone? So you would obtain a schedule of borrowings at the end of previous year as well as new debts raised or payments made. Okay. And you would verify the closing balances. You would also confirm uh, as a direct confirmation procedures. So this would ensure that about the existence and completeness. So similarly for valuation, you would see that these have been valued properly. Say there may be some foreign currency loans. Now whether these have been valued properly or not, these have been converted into Indian currency at closing exchange rates. Okay. In accordance with relevant accounting standards, say AS 11. Besides students, you have to understand and learn the disclosure requirements relating to long-term borrowings and short-term borrowings, which are there in Schedule 3. Okay. So long-term borrowings are classified as debentures, bonds, term loans, deposits, deferred payment liabilities, loans and advances from related parties, and so on. And similarly, short-term borrowings are classified as loans repayable on demand from banks, from other parties. So loans repayable on demand are basically, you can say, overdraft facilities or cash credit facilities. Deposits and borrowings shall be further subclassified as secured and unsecured. You have also to state in the financial statements whether borrowings are secured borrowings or unsecured borrowings. If these are secured, then nature of security has also to be stated. And where loans have been guaranteed by directors or others, the aggregate amount of such loans under each head has to be stated in accordance with the requirements of Schedule 3 to the Companies Act. And where the company has borrowings from banks or financial institutions on the basis of security of current assets, it means the company is having cash credit facility which is on the security of current assets or book debts, then it has also to be disclosed whether the periodical statements, quarterly returns or statements of current assets filed by the company with banks are in agreement with its books of accounts. Like say students, when a company avails cash credit facility, then it has to submit a monthly statement, which we in normal banking language call as stock statement or debtor statement. So the company has to disclose in the notes of accounts whether such quarterly statements filed by the company with the bankers or financial institutions, whether these are in agreement with the books of accounts or not. If not, then summary of reconciliation and reasons for significant discrepancies have to be disclosed. This is also responsibility of management. Okay. And if some company has been declared as a willful defaulter by any bank. So guys, do you understand what is meant by willful defaulter? What is willful defaulter? Who is a willful defaulter? Yes. Yes, guys, do you know who is a willful defaulter? Yes, Priyanka, intentionally deceiving. Little bit correct. So willful defaulter means a person who doesn't repay the money to the bank, although he has the capacity to pay, or say uh, he has misused the funds. He has say sold. He has disposed of the assets against which loan was granted. So if a company has been declared as a willful defaulter by bank or financial institution, then these details are to be given. Date of declaration as willful defaulter, detail of defaults. And registration of charges or satisfaction with registrar of companies. So students, whenever a company takes loan from a bank, whenever it borrows money from bank, then obviously it has to create a charge. It has to create a charge on those assets on the basis of which loan has been taken from bank. Okay. So this charge has to be registered with the registrar of companies. So where any charges or satisfaction to charges are pending beyond the statutory period, then such details and reasons thereof have also to be given. These topics you would be reading in your Companies Act. Registration and satisfaction of charges. Yes, guys, have you read it in your company law? Registration and satisfaction of charges. Yes, okay, Akash, that is good. So try your hand at some of these questions, guys. Read this question number 4. Yes, first of all, tell me whether you are able to understand this question. A company is manufacturing a product liable to GST at 5%. The input raw materials are purchased at 12 and 18%. As a result, ITC on inputs amounting to 75 lakhs is accumulated and refundable to companies under provisions of GST law. This amount would be shown under which head in balance sheet of the company? First of all, tell me whether you understand this question or not. Yes, Krish, Akash, Priyanka. प्रियंका यू आर सेइंग टू स्टेट इन हिंदी ओके. एक कंपनी है जो कि कोई प्रोडक्ट बना रही है जिसपे जीएसटी 5% है. ओके. इनपुट रॉ मटेरियल कंपनी जो परचेज कर रही है उस पे जीएसटी 12 और 18% है. तो उसके पास जीएसटी इकट्ठा हो गया उसके इनपुट क्रेडिट लेजर में. इलेक्ट्रॉनिक क्रेडिट लेजर में जीएसटी का इनपुट आ गया उसके पास, क्योंकि आउटपुट में कम हो रहा है यूटिलाइज, और इनपुट उसके पास ज्यादा इकट्ठा हो गया क्योंकि रॉ मटेरियल पे जीएसटी ज्यादा है. तो 75 लैक्स का जीएसटी उसका एक्यूमुलेट हो गया, और अंडर जीएसटी लॉ दिस जीएसटी इज रिफंडेबल टू हिम. इट इज गिवन इन द क्वेश्चन इटसेल्फ. So the question is the amount would be shown under which head in the balance sheet of the company? Where would this amount would be reflected? Yes. Yes, anyone? Yes, Akash. Akash is stating other current assets. Yes, it is perfectly right. Other current assets. Because say the amount is refundable to the company. It is given in the question itself. So when something is refundable to the company, it means that government department, GST department owes this money to the company. So it is an asset for the company. So it would be shown in other current assets. So obviously it would become due and the company would try to get refund. No, no, it is not a deferred tax asset. That is a separate thing, Krish. Deferred tax asset and deferred tax liabilities are terms used in context of accounting for taxes on income, AS 22. It is simply other current asset. So now say which type of audit procedures you would perform to verify this amount. Okay. Yes, Akash, you are correct. So which audit procedures you would verify, you would perform to verify this amount? Just think over it. Just plain common sense. Which audit procedures you would perform to verify this amount? Now we are talking about audit procedures. Yes, Priyanka, Akash. which audit procedures you are going to use for verifying this amount which is shown under the head other current assets. No, e-way bills do not have a relation to it. Malappa, internal audit is wrong. Checking liability register shown on GST portal. What would you get out of it? See, when once an amount is refundable, so obviously the company may have got refund in the subsequent period. So you would go to the portal and you would see whether company has in fact received the amount which was shown as other current asset as on 31st March. So it would give you evidence. It would provide you satisfaction. Or what you can do, you can make an analysis of purchases to see whether raw materials are in fact taxable at these rates, and you can see the electronic credit ledger which is on the GST portal to see whether this amount has in fact been accumulated. You can also verify the bank statements to see whether the amount has been received in the company's account. Okay. Now see question number 6. Yes, see question number 6, guys. We have discussed this point today. We have discussed this point today. Yes, Krish, you are right. Streams of revenue are to be segregated as sale proceeds from goods and services. This is specific requirement of Schedule 3 in respect of revenue from operations, that sales have to be shown separately in respect of goods and services, in respect of product and services. Now here the company is selling machinery also, and it is also rendering repair services. So repairs are in nature of services. So these have to be shown separately in notes to accounts. Yes, Akash, you are also correct. But you have to write that revenue from sale of products and sale of services have to be shown separately. Both have to be shown. It is not that only breakup, point is breakup has to be given. Okay. Now see this one. Discuss few analytical procedures to be performed by an auditor in regard to inventories. Now read the question carefully, guys. This question is asking about analytical procedures only. So you have to write only analytical procedures in relation to inventories. If you write that auditor has to perform test count, he has to attend physical inventory verification, so no credit would be given. because the question is not asking from you a general procedure, it is asking from you specific analytical procedures. Okay. So which procedures you would write? Yes, he would analyze inventory turnover ratio. Okay. He would make a vertical analysis, inventory upon total assets. So these kind of analytical procedures, these kind of substantive analytical procedures would be performed by him. Now, how can a company auditor be satisfied about rights assertion of immovable properties appearing in a company's financial statements? Now, the question is talking about immovable properties. How can a company auditor be satisfied about rights assertion of immovable properties appearing in company's financial statements? Only rights assertion. Yes, Deepika, your messages are coming. Now, how can a company auditor be satisfied about rights assertion of immovable properties appearing in company's financial statements? Discuss few audit procedures in this regard. Yes, Krish, you are right. Title deed. So for immovable properties, he would obviously see title deeds. Because these are any document like title deeds, allotment letter, some sort of agreement. So these give right to the entity in relation to a particular asset. These give legal rights. No, Priya, you can't write purchase invoices because the question is specifically asking about rights assertion of immovable properties. So for immovable properties like building, so you won't be having purchase invoices. You would be having title deeds or allotment letters or conveyance deeds, you can say. See this question number 3. Yes, yes, students, trade payables reflected in balance sheet of XY Limited are to the tune of 5 crores. CAZ, auditor of the company, notices that out of above, trade payables amounting to 50 lakhs are outstanding for since last 2.5 years. It means these are outstanding for quite long period. There is no movement either in respective accounts. It means no payment has been made to these trade creditors. So how he can obtain sufficient appropriate audit evidence so that creditors are not fake? So the first and foremost procedure is to send confirmation letters. Now these would provide evidence regarding the existence of those trade payables. These would provide evidence regarding the existence of those trade payables. Now see this question. नो आकाश, इसमें ट्रेड पेबल का स्टेटमेंट का फॉर्मेट होने का बात नहीं है, वो तो ट्रेड पेबल का वो एजिंग शेड्यूल है। क्वेश्चन आपसे ये पूछ रहा है कि आप क्या ऑडिट प्रोसीजर्स परफॉर्म करोगे जिससे ये पता चलेगा कि वो फेक नहीं है। वो तो लिखा ही हुआ है कि 2 साल से ज्यादा है, आउटस्टैंड है, तो आप डायरेक्ट कंफर्मेशन भेजोगे ना सबसे पहले तो। So a company has taken loan of rupees 5 crore from a bank for purchase of new machinery. The loan is repayable in a period of 5 years. How a term loan shall be classified in company's balance sheet? What disclosures are required to be made by company in this regard? Yes. Now what you would write in this question? Yes, question number 9, students. Yes, Deepika is saying the loan is to be disclosed as long-term borrowings under non-current liabilities. Yes, perfectly right. Shambhavi is also right. Priyanka and Krish. Yes, Krish, but you have to state that how it is to be classified. First, it has to be classified as long-term borrowings because it is a loan taken for purchase of machinery and it is payable in a period of 5 years. So it is a term loan. So term loans by their very nature, these are required to be classified under long-term borrowings. Okay, and all disclosure requirements you have to learn uh, from uh, from schedule 3. Yes, Akash, you are not right this time. These are long term borrowings. Okay. Yes, students, now you want to ask some question. Ashok ji, आप unmute कर सकते हैं. So students, while asking questions, do uh, write your registration number. As I told you last time, do write your registration number. Your name and registration number, please do write. Yes, Akash, you want to ask something? Priyanka? No, Krish, I do not have any idea. Yes, any student who wants to ask any question. Yes, अशोक जी आपने कर दिया, अनम्यूट कर दिया? Yes, students, do you want to ask anything or should we do some more questions? Akash is saying he is having no doubts. Yes, so I'll wait for another minute. If there are no questions, then I would request Ashok ji to mute you again. अभी नहीं अशोक, 10 सेकंड वेट कर लो. Yes, students, any one of you who wants to ask some questions?
सर
Yes, Akash, बोलो.
सर इस चैप्टर के अगर मैं पढ़ने के बाद मैं आज तो इसको रीड करूंगा सर, और अगर पढ़ने के बाद अगर सर मुझे कोई डाउट्स होंगे तो मैं नेक्स्ट सेशन में पूछ सकता हूँ ना?
हाँ हाँ, पूछ सकते हो. ऐसा है, जैसे आकाश मैंने आपको बताया कि इस चैप्टर को करने के लिए आपको 4 एस्पेक्ट हैं इसके. इसमें कुछ कंपनी लॉ की भी चीजें हैं.
यस सर.
ठीक है. इसमें अकाउंट्स की भी चीजें हैं. तो अगर आपको अकाउंट्स, कंपनी लॉ और शेड्यूल 3 मालूम है तो ये आपका चैप्टर समझ लो हो गया. ऑडिट प्रोसीजर तो आप लिख ही लोगे उसके साथ अटैच करके.
ओके सर. सर
यस.
ये जो क्वेश्चन जो आपने सर दिए हैं, तो सर इसके सर नोट्स मतलब वो पीडीएफ, सॉरी सर पीडीएफ कह रहा हूँ
पीडीएफ
इसके. सर
ये
सर सर
फाइल
पीडीएफ.
अपलोड कर दी है मैंने.
यस सर. ओके सर.
हाँ, ये फाइल अपलोड कर दी है.
ओके सर.
तो क्वेश्चंस जो एग्जाम्स में है ना आकाश, क्वेश्चंस
यस
हर
सर.
बार नए आते हैं.
यस सर.
कोई सेम रिपीट क्वेश्चन तो
नहीं
कभी
आते हैं
कभार ही
सर.
होता है कोई.
नहीं सर, नहीं आते हैं, वो तो बिल्कुल नए नए
वो तो
क्वेश्चंस
आपको
आते हैं.
कंसेप्ट में क्लैरिटी होनी चाहिए, तो आप उसका आंसर लिखोगे अपने आप ही.
सर.
गुड इवनिंग सर.
हाँ प्रियंका बोलिए.
सर कॉन्सेप्ट्स तो समझ आ जाते हैं, पर जब जैसे कोई क्वेश्चन रहता है उसको अगर एग्जाम फॉर्म में लिखना हो ना तो फिर अभी दिक्कत हो रही है, तो उसको
वो
कैसे
उसके लिए लर्निंग करनी
लिखते हैं?
पड़ेगी पहले आपको. आपको कंसेप्ट समझ में आ गया, अभी आपका फर्स्ट स्टेज अंडरस्टैंड हुआ. ठीक है. ये फर्स्ट स्टेज है. अब उसको आपको उनको पक्का करना पड़ेगा, रिमेंबर करना पड़ेगा, अपने दिमाग में एस्टेब्लिश करना पड़ेगा. बार बार, एक बार, 2 बार, 3 बार. सपोज जैसे ऑडिट रिस्क है. अब ऑडिट रिस्क का कंसेप्ट आपको समझ में आ गया, लेकिन लिखने के लिए आपको जब तक ये लाइन याद नहीं होगी कि ऑडिट रिस्क इज द रिस्क दैट फाइनेंशियल स्टेटमेंट that the auditor might express an inappropriate opinion when financial statements are materially misstated. जब तक ये लाइन याद नहीं होगी आप एग्जाम में लिख ही नहीं सकते. कंसेप्ट आपको पता है ऑडिट रिस्क का क्या है, लेकिन आपको वो लाइन याद होनी चाहिए.
ओके सर, इसके लिए
अभी
रिटन प्रैक्टिस जरूरी है.
रिटर्न प्रैक्टिस करने से पहले पहले दिमाग में उसको रिमेंबर करो. 1 बार पढ़ो, 2 बार पढ़ो, 3 बार पढ़ो, फिर उसको दिमाग में सोचो. कोई बात नहीं, धीरे धीरे चलो. जितनी डेफिनेशंस आपको याद हो रही हैं आप चलो. मतलब तो आपको समझ में आ ही गया किसी एग्जाम्पल से कोरिलेट करो, अपने दिमाग में समझाओ, बिठाओ और फिर लिख के देखो अगर आपको कॉन्फिडेंस नहीं हो रहा है तो। और फिर उससे देखो कि कहाँ गलती हो रही है मेरी।
ओके सर।
क्योंकि जब आप लिख के देखेंगे तो आप हो सकता है दो तीन इंपॉर्टेंट वर्ड्स ही मिस कर जाएं उसमें से, जिससे उसका मतलब ही चेंज हो जाए।
यस सर, मिस्टेक्स एंड स्पेलिंग्स
हाँ।
वगैरह।
हाँ।
ओके
यस। एनीबॉडी एल्स?
सर।
यस। आकाश, यू वांट टू आस्क समथिंग?
नो सर।
Yes, anyone who is on Zoom, he can ask question by giving his registration number, by giving his or her registration number. I think there is none. So, अशोक जी आप म्यूट कर दें सबको, कुछ क्वेश्चन कर लेते हैं हम और। म्यूट कर दें। Yes, see this question, guys. Test your understanding too. Now, what would be the answer to this question? Yes. A company has availed cash credit facility of 2 crores, outstanding balance of 2 crores as at year end from a bank for meeting its working capital requirements against security of stock and debtors and guaranteed by directors. Discuss how the above cash credit facility would be classified and disclosed in financial statements of company. Yes, students, pretty simple. Yes, Priyanka, you are right. These would be shown under head short-term borrowings, and obviously security, nature of security would be stated. It would also be stated that it is guaranteed by directors of the company. So all the disclosure requirements which are there in Schedule 3 pertaining to short-term borrowings, these have to be stated. So whatever disclosure requirements in Schedule 3 are there in relation to short-term borrowings, so you have to remember these and correlate to the question and write these. Okay. Yes, guys, see this one. This concept we have not covered today, but let us see if any one of you knows about it or not. Various ratios of current year and preceding year are disclosed in financial statements of a company in accordance with requirements of Schedule 3 of Companies Act. Discuss requirements of law in this regard. So although students, we have not discussed this today in the class, but if any one of you can answer this. So remember guys, there is a requirement in Schedule 3 where a company has to disclose various ratios of current year and preceding year in the notes to accounts, like net profit ratio, like current ratio, like debt equity ratio, like some other ratios. So the question is asking you to state requirements of law in this regard. So law states, Schedule 3 states that these ratios have to be disclosed and their numerator and denominator has also been disclosed. That say you have calculated one ratio, then what formula you have used, what numerator item you have used, what denominator item you have used, because there may be different items may be used in calculating such ratios. And if there is a variation in the ratio by more than 25%, then it has also to be disclosed. Okay. So this is also disclosure requirement of Schedule 3. Okay. So when you have done the whole Schedule 3, so you can very easily answer such type of questions. An auditor of a company is focusing upon revenues of a company. In this regard, besides performing usual detailed checking of sales, he wants to perform substantive analytical procedures in respect of sales. Discuss how he can perform such procedures. Now, substantive analytical procedures for sales we have discussed today, students. Performing trend analysis, calculating ratios related to sales, performing, making an category-wise analysis of sales. Okay. Yes, Santosh Das. Yes, you were there in the previous batch also. Santosh. Yes, tell me, you didn't appear for the exams, Santosh? Okay, that's fine, Santosh. Yes, see this one. Yes. Now, Priyanka, you are writing depreciation is available on assets. Now, remember, we are talking about balance sheet of a company prepared in accordance with the provisions of Companies Act, in accordance with the requirements of Schedule 3. We are not talking about provisions of income tax law. Yes, Krish, you are right. So in accordance with requirements of Schedule 3, depreciation is recorded from the date when from the first date of purchase. Yes, Krish, you are right. So although in income tax law the depreciation is available from the day asset is put to use. Okay. So you can see the answer also. Now what is written in answer here? So depreciation of an asset begins when it is available for use. When it is in the location and condition necessary for it to be capable of operating in the manner intended by the management. Depreciation on asset is charged on the date from when it is ready for use and not from date of actual usage. So the asset was available for use from 1st April, but because of certain limitations, the asset couldn't be used because there were no orders. So therefore, recording of depreciation by the company with effect from 1st October is not proper. So remember, we are talking about Companies Act, not we are not talking about income tax law, where depreciation is available from when asset is put to use. Okay, so these two things are different, students. So guys, yes, अशोक जी एक बार और कर दीजिए, अनम्यूट कर दीजिए. ये स्टूडेंट्स, किसी को कुछ पूछना है और शुड वी कंक्लूड द सेशन? Yes, students, you want to ask something? Or should we conclude the session?
सर
Yes, Akash.
सर एक कैश ऑफ क्रेडिट के रिस्पेक्ट में सर एक डाउट था, मतलब ये आउट ऑफ कोर्स है एक्चुअली.
किसके बारे में?
कैश क्रेडिट के बारे में सर.
कैश क्रेडिट लिमिट के बारे में?
नो सर, लिमिट के बारे में नहीं, मतलब उसी के बारे में सर एक डाउट था जो आपने बताया था ना कि ये करंट लायबिलिटी होती है कैश क्रेडिट. शॉर्ट टर्म बोरिंग्स, हाँ शॉर्ट टर्म बोरिंग्स में आते हैं सर. तो सर जैसे कि अगर हम लोग का सर अपना बिजनेस भी था तो पापा ने लिया हुआ था इसको कैश क्रेडिट को सर. तो सर ये काफी लंबे टाइम तक सर चला, तो इसको हम
नहीं, वो चलता लंबे टाइम तक है, लेकिन ये अगर आप ध्यान से देखें तो हर एक साल रिन्यू होता है ये.
ओके.
वो सैंक्शन एक बार करते हैं, आपकी लिमिट
अच्छा.
चलती रहती है रूटीन में, लेकिन वो हर एक साल दोबारा सैंक्शन होती है.
अच्छा
32 साल के लिए ही है. इट इज फॉर ए पीरियड ऑफ 12 मंथ्स, लेकिन वो हर एक साल रिन्यू होती है दोबारा.
अच्छा सर.
इसीलिए इसको हम शॉर्ट टर्म बोरिंग कहते हैं.
ओके.
ठीक है, क्लियर स्टूडेंट्स? Okay, students, so our next class is on 31st.
No, sir. I think so.
So see you on 31st.
yes,
कोई
sir,
भी
it
आपकी
was.
क्वेरीज हो तो तब आप स्टूडेंट्स शेयर कर सकते हैं.
Rather, they can revise all the chapters which we have covered till.
Yes, ma'am.
है ना. और राइटिंग
Yes, ma'am.
प्रैक्टिस इज वेरी वेरी इंपॉर्टेंट. सर ने बोला ना आप लोगों को लर्न तो हो जाता है, बट व्हेन यू वांट टू अप्लाई योर नॉलेज देन यू आर नॉट एबल टू राइट इन द एग्जामिनेशन. So you need to practice. Actually, writing practice is very, very important. That is the reason we conduct mock test paper also. Okay. So before 31st, you please complete the chapters which are covered by sir and which we are going to cover in next session.
Yes, ma'am. Okay, ma'am.
Okay.
Okay.
Because long gap is there, so you complete you can view the lectures uploaded on the portal. Yes. And cover the syllabus. Okay, so that you can ask the sir what kind of problem you are facing. Thank you, sir. Thank you, all the students.
Thank you, ma'am.
Yeah, thank you, ma'am. Thank you, sir.
Thank you,
sir.
ma'am. Thank you, sir. Okay,
yeah. So I think we can conclude the session. Yeah.
Yes.
Thank you.
Good night, sir. Good night,
Good
sir.
night.
Good night, ma'am.
Ashok ji. Yeah. Good night. All the best.
Thank you.
Yeah. Thank you.
Good night, sir.